Straight to the point. Today, I'll be showing you everything you need to know to become profitable by trading support and resistance, supply and demand, or order blocks. I will be walking you through exactly how I spot the most accurate levels to trade around, and I'll be walking you through the strategies that have helped me accumulate an 87% return in Forex this year while only trading about twice a week, a 42% return in stocks, and a 120% return in crypto in 2023. The strategies and techniques I'll be showing you today work on any time frame and in any market. So if that sounds like something you want to learn, go ahead and click that like button for me. Go ahead and subscribe if you are new. And I'll see you right after the intro and disclaimer. So this is the part of the video where I would normally define what support and resistance are, but there seems to be a lot of confusion around this. So I want to clear this up right now. On the screen, you can see three definitions. The definitions of these are the definition of support and resistance, the definition of supply and demand, and the definition of order blocks. Read through them. Pause the video if you have to. What you'll notice is that these three things are wildly similar. So in this video, what I want you to understand is we're just looking for major levels of structure that are likely to push the market around. It does not matter what we call them. It doesn't matter if you want to call them support and resistance, supply and demand, or order blocks. They are all essentially looking for the same exact thing. So in this video, I'm going to be teaching you my rules for finding major levels of structure the market is likely to react from and that we're likely to find profitable trading opportunities in. But the rules I'm going to share with you aren't the exact rules for support and resistance, or the exact rules for supply and demand, or the exact rules for order blocks. It's more of a combination of all of these things. And the main reason I wanted to share this with you is because I don't want you to get caught up on what it's called. More so, I want you to learn the concept of finding these areas in the market and getting profitable trading opportunities inside of these zones. In a nutshell, there are two different major levels of structure that we're going to be paying attention to for possible trading opportunities. Those two different levels are trend continuation and counter trend levels of major structure. Trend continuation levels are known as role reversal levels. And on the screen, you can see an article from Fidelity. Feel free to pause the video and check that article out. But essentially what it says is oftentimes if a market is trending higher, the previous resistance level will become support. And oftentimes when the market is trending lower, the previous support level will become resistance. Now I know this is very basic, but again, we're starting with the basics just for those of you who are brand new. Then we'll move on to some more advanced material. Let's go ahead and point out these role reversal levels, and I'm going to talk you through the psychology behind them and why they actually work to create an area where we can find accurate trading opportunities. If you look on the chart here, you can see that price was pushing up from here. We get to this high, and then demand begins to decrease for this asset, which causes it to pull back. At some point during this pullback, the price gets so low that people see this as a deal. This is kind of like a major sale going on a product, and if it gets to a certain price, let's say a TV is 50% off, you're much more likely to buy that TV when it's 50% off. That's what happens after pullbacks. So oftentimes we'll see the increase of an asset followed by the decrease in demand, which causes a decrease in price, followed by that asset being considered on sale by a majority of the market, which then causes prices to push into trend continuation, making new higher highs. Now, what has happened in this situation as well is that right here at this first high, there have been a lot of sellers try to take control. And not only try to take control, but just sell the market in general, expecting this to be a complete reversal and trying to capture a lot of profit by selling the market. And by the way, for you beginners, selling the market means you make money as the price of an asset goes down. And obviously buying is the opposite, where you make profit as the price goes up. But this is what they were expecting. They sold right here, expecting price to continue lower. So what do you think happens to them if they sell right here and then they see price drop a bit? They get excited, but then they see price push much higher. Well, in this case, they are losing money. When you lose money, you get scared. When you get scared, you want to get away from that fear. So the way that they get away from the fear is that when price pushes back down and gets to the level where they are break even, they buy the market. And what I mean by they buy the market, if you're a seller here, in order to get out of your position, you have to buy back into the market. So the initial push up from a previous level of resistance that has now become support is because of this. It is because of sellers that have been through pain by price pushing higher, deciding to get out of a trade to get rid of that pain around break even. So that's what the initial buying pressure is. And then if you combine that with the price of this asset being on sale, because that's essentially what a pullback is. That's the price of an asset being on sale. If we get this pullback, this asset's now on sale. And if a majority of market participants agree that this asset is on sale, this is how you actually spell it, excuse me, then what will happen is we will see trend continuation. And this continues as price continues up until we get some type of reversal. So if you'll look back, here's what I want you to notice. If we look here, where did price, after pulling back, breaking above this resistance level, find support? Right at that previous resistance level, right? And if we look back, again, it happens again. We have price pushing higher. We have a pullback. That pullback comes into this previous level of resistance. Then we see price pushing higher. So again, what's happening here is we're getting sellers that were scared because price went above their initial entry. They're losing money here. They want to get rid of that fear. They want to get rid of the position. They were not correct. They were expecting price to keep going lower. So what they're going to do is a lot of them are going to decide to exit their sell position at this previous level where they went short trying to sell the market. And that's going to cause buying pressure because when they exit their position, they have to exit it with a buy trade. Now, let's take a look at a bearish version of this. It's a very simple concept. It should be pretty easy to understand at this point. We have prices pushing lower. We have buyers trying to step in and take control. Remember, these buyers are expecting this to be a price reversal. Well, when that doesn't happen, price continues lower. Those buyers are losing money. And since they're losing money, they're in fear. They do not want to lose money. So the way they avoid losing money is they get out somewhere around break even, which was the previous level of support. So when they see this pullback, push up, this is a great level for them to say, hey, I realize now that I was wrong about this buy trade because prices have now closed below this previous swing low. Since I'm wrong, I want to get out of my position right where I bought in, right at break even. And that initially causes sell orders. And if those sell orders continue, that's what causes the continuation in trend. So for a quick recap, when we're looking for bullish trend continuation, we're going to be looking at the previous level of resistance. We're going to wait for price to come back to that level, and that level can become support. Obviously, there's a lot more that goes into it than this, and we're going to discuss some details and a lot more rules we have for this a little later in the video. But I want everyone to understand this part of it before we move forward, because otherwise you're going to be really confused when we talk about more advanced concepts. For a bearish example of this, we're going to be looking at previous support becoming resistance. You guessed it. So that's what we're looking at in terms of the role reversal and the trend continuation side of spotting major levels of structure, along with the other rules we're going to talk about in just a second. But for now, let's dive into the counter trend major structure levels that we're going to be looking for. For counter trend levels, let's say that we have a market that's done something like this, then we start trending down, and then we start trending back up. At the point that we start trending back up, wherever price is, the highest swing high price is made. By the way, this is for a resistance level counter trend trade. At that resistance level, I'm going to look up and to the left and find the very next resistance level that price will inevitably hit if it continues higher. So if price continues higher, it will absolutely hit this level. This is going to be the only level I mark out for counter trend at that point in price. So let me go over that one more time really quickly. We have a market pushing higher, pushing higher, pushing higher, then it starts to reverse, right? During this downtrend, at this point right here, where would I be looking for possible counter trend trades? We've started a new downtrend with this 1, 2, 3 move. So at this point, where am I looking for counter trend buy trades? At this point, I would be looking for buy trades right there, right at this next support level that price will hit if it continues. Now notice, for counter trend trades, I did not pick the previous resistance level here. And there's a really good reason for that. I've noticed that these levels are not quite as accurate as looking for just support levels when you're looking for buy trades, and just resistance levels when you're looking for sell trades. We're going to take a look at a lot of examples of these when we go through the advanced rules, but essentially, if price is right here, I'm just looking for the next level where price has been supported in the past. I'm not looking at the previous resistance level for counter trend trades. I'm only looking for that next level where price has been supported in the past, and that will be the level that I look for possible trading opportunities to the buy side from. So for an example, on real charts, what trend are we in right now here on the pound New Zealand? Well, we've had a 1, 2, 3 move, and we've since even created another lower low. This should be a lower high if we're going to continue in trend, pushing lower. So at this point, here's how I would actually do this in real time. This is real time on the pound New Zealand. What I'm going to be doing is placing a horizontal line at that previous low. I'm then going to scrunch up my charts until I see the next level of support price is going to hit if this downtrend continues. That is very easy to spot in this case. We look below the lowest swing low that's been made, and we look to our left, and we can see this is the next level of support that price is going to hit if, in fact, we do continue in this downtrend and break into new lower lows. So with that being the case, all I have to do is pull this down to that level, and I can create my area of counter trend support that I'll be looking in for possible buy trades here on the pound New Zealand. Again, if we do in fact continue in this downtrend, this is where I'll look for that pop before the continuation or even a full reversal if we get lucky enough. For an example on resistance, here we have the Aussie New Zealand, which is currently in this uptrend, right? As we've been in this uptrend, price is obviously right here at the moment. And what will I do in order to spot a counter trend level that I can make possible trades in? I'm going to put a horizontal line at the very top of the swing high of this uptrend. I'm going to look up and to the left and find the latest level of resistance looking left, and I'm going to use that area as my counter trend resistance area. If we scroll the chart back, it's really easy to see that this is that zone. So here on this chart, that's where I'll be looking for possible counter trend trades, is in this area of the next resistance level price will hit if it continues up in this uptrend and breaks above this level. So that was the most basic version of finding trend continuation and counter trend major levels of structure to trade around, but obviously that's not all we need. What I mean by that is if you use the information that you've learned so far, that's not going to make you profitable. We have to add other conditions to these levels in order to make them profitable areas to trade. Using it by itself doesn't mean anything. And after adding those other conditions to make them profitable levels and major levels of structure we can trade around, after doing that, we also have to add in entries, stops, and targets to create a full strategy and turn this into a money-making opportunity. So that's what we're going to dive into right now with the other conditions we need to see. We're going to start off with trend continuation, and we're looking at a bearish example here on the pound dollar. We're going to add two things to our trend continuation version of spotting these major levels of structure. Number one is the 50 EMA. That is the blue line you see on the screen, and what this is going to do is make it super easy to spot the trend of the market. For our bearish trend continuation trades, what we're looking for in terms of our major level of structure is the previous level of support to become resistance, right? Well, with this added condition, what we're saying is that both of these must occur below the 50 EMA. So we need not only our support level to happen that breaks below, right? That price breaks. We need that to happen below the 50 EMA. We also need the pullback to stay below the 50 EMA that gets to that level. And if that is the case, then we still have a valid level. So the first thing we're going to add as a condition is that all of this must occur below the 50 EMA, and obviously this is just for the trend continuation version of this, not for the counter trend. So for trend continuation, that's one of the conditions we are adding. Another condition we're adding is that this level must have been tested multiple times. So here's what that looks like. Whenever we're looking back at a level, we have our downtrend, 1, 2, 3 move. We have our previous level of support, and we want to make sure that this level hasn't just been tested one time in through here, but also has been tested in the past. This would be a perfect example of this, as this level has been tested 4 times as support, which means it now has a really high likelihood of becoming resistance for this market. So adding those two conditions to your trend continuation trades will make them wildly more profitable. And I often get the question, how far back should I look when I'm looking for multiple tests of a level? I don't have a rule for that, but if you need a rule, I would say between 200 and 300 candles. And yes, what I mean by that is you have to go count every one of these candles and see if there's 300 on the screen. Totally joking. You can use the ruler tool, which is right here, and all you have to do is pull it sideways, and you'll see a little number that says 316 bars. That means we're looking at 316 bars for as far sideways as we're going with this specific ruler tool. That's the easiest way to look at it. And the reason I do that instead of saying look back a month or look back 2 months is because it depends on the time frame you're on. The things I'm talking about in this video work for any time frame. So if you're on the 1 minute chart, you obviously don't want to be looking back a month. That's way too much data. If you're on the daily chart, you're probably gonna have to look back further than a month. So stick to around 200 to 300 candles. 200 to 300 bars is what we want to look at when we're looking for that second test of a level. In this case, what do we have? Our downtrend. We have multiple tests, right? And we have this occurring below the 50 EMA. So this would be a perfect example of a trend continuation level that I would actually look for trades in based on all the conditions for an accurate level of structure. With this being the case, let's go ahead and push price forward and see what happens. Price eventually gets in this level. This is when I would actually start looking for a trade. And as you can see, after coming into this level, prices did fall pretty dramatically. And I know right now you're probably thinking, so how would you enter the trade once prices got into this area? And that's something we're going to discuss in just a second. First, though, I want to give you all the conditions for a counter trend level of structure. That way we have the levels of structure completely out of the way before we talk about entry, stops, and targets and the full trading strategy. For our counter trend example, we're looking at the dollar yen. What trend are we in right now? What has the dollar yen done most recently? Well, most recently we've had this 1, 2, 3 move, putting us into a downtrend. Again, 1, 2 being the pullback, 3 being an impulsive move that breaks below the pullback. Since we're in a downtrend, that means I'm going to be looking for trend continuation. And also I'm going to be looking for counter trend trades. The way I'm going to be looking for counter trend trades is how? What am I going to be looking for? Well, the first step is to put a horizontal line where price currently is. At this point, I know I'm looking down and to the left for what? For the last level that price was supported by. And I know that level is going to be where I'm going to be looking for possible counter trend bounces out of. Now, the condition we're adding to the counter trend way of trading is the same as the one we added to the trend continuation version. We're just adding the fact that it has to be tested multiple times. Obviously, the moving average is irrelevant during a counter trend opportunity, but we are adding the rule that we need to see that level tested multiple times. But our first step, let's look down and to the left and see the next level of support price will inevitably hit if it continues lower. If we're scrolling left now, we see that that level is right here. Now, by the way, I do not pay attention to these long wicks at all when pointing out structure levels. So just kind of discount this wick if you can. So right here, again, the level that we're looking at is right here. It's this level of support. This is the level of support. Price is right here, remember. This is the level of support price will hit if it continues lower in the downtrend. Now, the second question I have to ask myself is this level a level that was tested multiple times? The answer to that is obviously yes. We have 1, 2, 3 tests with this little resistance area. We have another test here. We have a little support, and our final support before price went higher. So this matches the criteria for everything I need to see, all conditions included for a counter trend trading opportunity for me to start looking for possible entries in this specific zone. Let's click play and see what happens. At this point, I would be looking for entries in this area. And again, we'll talk about entries in just a second, but as you can see, it did in fact cause this big bounce out of price. So those are the conditions that I use in order to spot really accurate areas to place trades from. But those are just conditions. And conditions do not mean you're going to be a profitable trader. You could know so many conditions, it's not even funny. But the point of conditions like support and resistance, supply and demand, order blocks, I don't care if you're learning about indicators, moving averages, the whole reason you are learning about all of those things is with the main goal of creating a profitable trading strategy with them. There is no magic bullet. There is nothing that's going to be just that one thing will make you money as a trader. What you're going to have to do is combine these conditions with specific entry reasons and a specific way of taking a stop loss, managing your risk, and a specific way of taking your targets and accepting your gains, All of that combines to create a profitable trading strategy, which will make you money in the long run as a trader. But just having conditions is irrelevant if you don't add those things to it. So although I just shared with you the conditions I use to find the most accurate areas in the market for my own personal trading, it's not enough. We now need to talk about a full strategy and get into entries, stops, and targets. So I actually have a number of different entries that I utilize inside of these major levels of structure, but if I tried to teach all of them, this video would be about 6 hours long. So instead of doing that, what I'm going to do is share with you my favorite way to enter trend continuation trades when utilizing major structure levels, and my favorite way to enter into counter trend trades when utilizing these major structure levels. Now, the way I enter into trend continuation trades is a lot more aggressive. And the reason for that is that those trades tend to have a bit more accuracy. I'm going with the trend in those trades, while on the other side of that coin, I tend to use a more conservative entry most of the time when I'm looking at counter trend trading opportunities. But right now, let's focus on our trend continuation entry, stops, and targets. So here we have the dollar Canada. We're currently on the 4-hour chart. As you can see, we are currently in an uptrend. So what has just happened here on this pair is we pushed up, creating our 1, our 2 is our pullback, and we broke above this resistance level with our number 3 move, which is the impulsive move that broke above the previous swing high. In this case, what am I going to be doing for a trend continuation level? Well, I'm going to be marking off this previous level of resistance. What are our other rules that we must use in order to make this a level we can actually trade from? Well, my other rule is that this level must have happened above the 50 EMA. Is that the case? Yes, it is. And the other rule I have is that it must be a level tested multiple times. Looking left, we can see that this was used as a major level of resistance here as well, making this 1, 2 times that it's been tested. That's all I need. Now I know I'm inside of a zone that I can look for potential trading opportunities out of. So if we push price forward here, we can see we're already inside of this zone. And what I'm going to be doing, as long as we stay above the 50 EMA, remember, even this, it can be touching the 50 EMA, but I want the close of my entry to be above the 50 EMA. And for entries on this trend continuation trade, one of my favorites to use is an engulfing candle, a candlestick pattern that closes above the high of the previous candle. If I zoom in here, you can see that that happens right here. So here we have an engulfing candle, which means a candle with the body larger than the previous body of the previous candle. Now, this must be a color change as well, meaning we must go from red to green on that candlestick. And my other added rule that I use for these trades and these trading opportunities is we must have the engulfing candle closing above the high of the previous candle. Since all of that is true in this case, what I'm going to be doing is placing an entry at the close of that candle. So this would be my actual reason for entry. For stops and targets, I normally actually manage these positions if they're trend continuation, but that's a bit complicated to go into here on YouTube and here for this video. I'm trying to keep this video a little shorter today. So for stops, I'm going to be going below that previous swing low after our engulfing candle, or the swing low that happened during this pullback, whichever one that is. I'm going below the swing low of the pullback with my stop loss. And then for a target, something I use often whenever I'm taking fixed targets and I'm not managing the position, I utilize a 1.4 to 1 reward to risk ratio quite often. So that's what we're going to do for these examples today. And as you can see, this is the way that trade setup would look. If we click play, you'll see that this trade played out. And the reason it did is because I like showing winning examples, but understand that this strategy also has losses. We'll talk a little more about that in a second. But here you can see a trade that worked out well because we waited for price to get to an area of structure that was very likely to become support. We then had a rules-based way that we entered the market with that engulfing candle that closed above the previous candle. And because we followed the plan and the market reacted well to our analysis, we came out as profitable and made money on the specific trade. Now, let's talk about the counter trend entry that I use most often and the one that I find to be the most profitable. And first, let's take a look at the chart now. We're on the pound dollar. Here on the pound dollar, how are we going to find this level of structure that we could trade from, this major level? We're going to put a horizontal line where price is now because we're in what type of trend? This market has pushed up to a high, higher low, higher high, higher low, and created a new higher high. We're currently in an uptrend. With that being the case, and we're going to be trading counter trend in this example, we're going to put a horizontal line at the highest point price has gotten to, then go up and to the left to find our major level. Let's scroll back the chart. Here is the next level of resistance price is going to hit. So with that being the case, we're going to make this our resistance level. And this is going to be the area we look at for possible trades. Now, what's the next question we have to ask ourselves? Has this level been tested multiple times? Well, here we have 1, 2, 3 tests of resistance along with another little resistance here. That counts for me, so that's going to be a yes. So this is in fact a zone where I'll be looking for possible trading opportunities. Now, for counter trend trades, I do something a little different. Wherever I find my zone, I drop down one time frame to find my entry. So right now we're looking at the zone on the daily chart. I'm going to be dropping down to the 4-hour chart to look for the entry. If my zone was on the 4-hour chart, I'd go down to the 1 hour. If my zone was on the 1 hour, I would go to 30 minutes, so on and so forth. You can see my time frames up here. That's the ones I drop down to. So we're on the daily. I'm going to drop down to the 4-hour for us to find our entry. Now we are here on the 4-hour chart. This is the area we pointed out back on the daily. And for the entry on a 4-hour chart, I use something very simple. It is just chart patterns. More specifically, and the ones that I use most often are double tops in levels of resistance and double bottoms in levels of support. But I have to utilize a specific entry on these double tops. I'll show that to you now. Here we push up and we end up getting this nice double top. We have one top here, the neckline of our double top, the second top. The entry reason, I need a specific reason that I'm going to click the sell button on a double top, and that entry reason is going to be a red candle. So after my double top, I want to see a red candle. And as soon as I see that red candle after my double top, that is when I'm going to utilize actually placing the trade. This would be when I would place the trade coming off that double top. I would have a stop loss above the highest point of that double top. And again, we're going to utilize the same targets, but as I said earlier, I do manage these positions quite often, but here for these examples, we're going to use a 1.4 to 1 reward to risk ratio. Let's see how that plays out. As you can see, price pushed down and did in fact hit our targets. And this is actually a trade that I had recently, earlier last week. So now you have a full way of trading around support and resistance, supply and demand, order blocks, whatever you want to call it, levels of structure that are likely to push the market around. You have your entry, stop, and target. You also have how you're going to identify these zones in a very rules-based way, and that's going to help you stay consistent. And utilizing this is something that's helped me become and continue to be a profitable trader. Now, this is not all you need to know, and obviously every strategy comes with losses. So it's going to lose at times. You're going to have losing streaks and drawdowns no matter what strategy you use, and that's why it's so important for you to learn and understand the other parts of trading, like risk management and trading psychology. Now, those things aren't something I have time to get into today in this video, but if you want to learn some other strategies that I use in my own personal trading, along with get a full organized university style course that will teach you every aspect of trading you need to stay consistently profitable, then we do have some space available right now in the TTC Forex University. In the university, you'll get a full course teaching you everything you need to know to become a profitable trader, and along with that, you'll be getting 2 to 5 emails a week that are trades I'm actually placing based on the strategies you're learning, the Pro Trader Report every Monday, which is me showing you the levels of structure I'm paying attention to for the week ahead. And on top of that, you'll also get priority coaching support, which means any questions you have, you can email and it will be me personally answering those questions to give this more of a mentorship style and so that I can help guide you on your path to becoming a profitable trader. If you're interested in that, to find out all the details, all you got to do is click the top link in the description or go to www.ttcfxuniversity.com. If not, then I still hope you enjoyed this video. Hope it taught you something. If it did, click that like button for me. Go ahead and subscribe if you're new, and I'll catch you in the next video. See you soon.